it can be.
Smooth 98.1, love music, love life. Thanks for staying tuned. I'm Ayo Mairo-Ese. Time for Business Express 981. On today's show, I have with me Onome Ohwovoriole. Good morning, Onome. Thanks a lot for coming again this morning.
Good morning, Ayo. This is a good notice to Rotos, Valentine, Judith, and Kayode, and everyone else who murders my name. Please take notes on them.
Thank you very much, Onome. Joining us this morning as well, I have Babatunde Ogunleye, Equity Research Analyst at West Africa Region for Stanbic IBTC. Good morning, Babatunde. How are you today?
I'm fine, thank you. Good morning, Ayo. Good morning, Onome. And good morning to all the listeners at home.
Fantastic.
Thank you for having me.
Great to have you on the show. Today, we're going to be reviewing the Nigerian banking sector with Stanbic IBTC. There's a report around that, which we'll be using as a foundation for our conversation this morning. If you're listening to us and you'd like to be a part of the conversation or perhaps ask a question, then you can do so using our WhatsApp platform. The number is 0809 44 444 actually. 0981. I'll take that again, 0809 444 0981. We're also streaming live on YouTube, so you can head on to YouTube, watch, and also use the comment box to send us a message to ask any question. Onome, over to you now.
Okay, so let me start with, I've gone through the report, right? So I'm just going to pick portions of it. The opener says the Nigerian banks have had operated in a difficult environment and it's starting to get better. So could you explain what that difficult environment is and what are the things that are getting better?
Okay, so let me just pick it from there. So in terms of the banking environment, so you probably look at it from the regulatory perspective. So from the regulatory perspective, I'm just referring to the consistent debit from the CBN. So typically, banks are basically constrained in terms of what they can invest, and then also looking at the fact that the regulatory minimum for the CRR is around 27.5%. But across the individual banks, you've seen like CRR as high as the regulatory minimum, basically. So for the banks, basically, because of the nature of those CRR are also untimed, it sort of creates uncertainty for the banks in terms of meeting liquidity pressure, and in terms of meeting liquidity needs as well. So although like we've seen CBN sort of refunding the banks, the CRR in form of special bills, the basic features of these special bills are the special bills have a 90-day maturity and is at 0.5% from the CBN. However, if you look at the secondary market at the rate at which those special bills are trading, it is at the level of 6%, around 6% levels. So looking at that, for banks who intend to sell those special bills in the secondary market, they are definitely going to book a loss. So due to that impact of that CRR debit and also the impact of the on-time schedule, so we've seen like uncertainty in terms of that, in terms of the difficult environment. And also, if you could also remember from early part of last year too as well, there was a revision on e-banking fees transactions. So across the ATM charges for banks, there were reduction across ATM charges, POS, and the likes. So because of that too as well, banks typically suffered from low e-banking revenues at the end of last year. However, for the banks to be able to grow their volumes, we've seen a reversal in that regard. And what banks are typically doing to be able to offset the low cost is to be able to grow volumes in that particular area. So just speaking in terms of the looking better part, it's just going to be that if you look at where the rates were as at the beginning of the year, I think the average TB rate was around 0.03%, but now it's taking higher, it's around 2.47%. So just looking at where we were from the beginning of the year to where we are now, so we've seen an improvement in the yield environment. So for banks that have a high yielding assets, you expect that when the yield continues to increase, you expect that should sort of create a positive impact for their net interest margin, basically.
Okay. Okay, just to break it down for our listeners, right? And let's use 100 naira as an example. What does CRR mean, and why is it important to banks, right? And why are the adjustments in CRR, and how does it affect banks, and why is it important? So let's use 100 naira, and I know the meaning of all those things. I'm sure regular listeners might know, but just for anyone who's just wondering what's that mean, if we look at what of 100 naira, what portion goes to CRR, what portion goes to LR, and all those things. So just break each of those things down.
Okay, so for the CRR, so for every depositor fund that you receive, you need to create a certain percentage of that with the CBN in form of you need to create a percentage of that with CBN in form of how do I put it now? Just to avoid like uncertainty as regards banks unwilling to pay up those deposits. So you keep certain percentage with the CBN of that. So the percentage that was set at 27.5% in that regard. So using your 100 naira example, so if I get 100 naira depositors fund, I'm putting 27.5% of that with the CBN. But however, that's not been what banks have been witnessing. So for every 100 naira, a bank's CRR could be as I think late last year it was as high as like over like 50% from what banks are being charged in terms of the CRR. And then the CRR is also something that, like CBN, the argument has been that they are trying to mop up liquidity in the system. But however, the nature of those CRR debit has just been untimed, and then it can just come all of a sudden. So so that is that part on that part. So I don't know if that probably explains that part of the 100 naira part of it. So for what CBN is not trying to do now in that regard was typically to refund those excess CRR that they've taken in the past, to refund it to the banks so that the banks can, to refund those excess CRR to the banks in form of special bills. But those bills, they are not yielding at the rate of what you would expect them to sell. So if you look at what Treasury bill rate is compared to where the special bill rate is, there's a quite disparity between those rate levels. So as because of the banks are constrained, so basically those CRR sits with the CBN at 0%. So banks are not earning anything on the CRR that is with the CBN. So typically, like if banks have that fund, you could argue that banks can be able to earn more interest in terms of interest earning by putting those funds in high yielding securities, basically.
Okay. Then in terms of return on equity and return on assets, which banks performed best during the period? And please explain what return on equity means and return on asset means in as simple a manner as possible.
Okay, so for every shareholders fund that you take, for every shareholders fund that you have, you generate a return on that perspective. So you are being measured from the ROE perspective, that's the return on equity. You are being measured from the perspective of what from the shareholders fund, what percentage of return were you able to generate? And from the asset perspective, that's the return of assets. You are being measured from the perspective of as a percentage of total assets that you have and that the banks have, what percentage of those total assets are they able to generate from those assets? So they are basically measuring more of the profitability levels for the banks. So just speaking in terms of the banks that has outperformed, we just say probably Access Bank. Access Bank dominated the ROE, achieving ROE of 24%, followed by GTB, that's around 19.9%, and then followed by Zenith at 18.6%. But speaking in terms of the ROA, that's the return on assets, GTB seems to generate more earnings from their assets base at 3.2% and Zenith at 3.0% compared to, which are very much higher than Access Bank at 1.7%. So from an ROA perspective, you say Access Bank, and then from an ROA perspective, you say GTB.
I was just wondering, though, why is Access Bank leading in terms of ROE, right? And it's lagging in terms of return on assets, but because you would expect that, okay, I think if I'm right, it's the biggest bank by asset size, right? So therefore, why isn't it at the top in terms of return on assets? Is it due to the merger? Is it something else? Why is that so?
Yeah, so part of it can be attributed to the fact that if you look at where their asset book was coming from after the merger with Diamond Bank, so their asset book base grew. So like they were able to grow their assets. But in terms of what they were generating in terms of those assets, it's just what was low in that particular regard. So for compared to like the GT Bank, so for GT Bank as well, like GT Bank is generating more from its asset base. And then speaking in terms of what has led to the improvement from Access perspective, Access typically add like Access and UBA typically have like high yielding investment securities. So at the time when the interest rate environment moved, that sort of helped them to be able to book like a high interest income, which sort of helped them achieve the growth that they had during that particular period in H1 2021.
Okay. Ayo, do you have any questions at this point?
None at the moment, none related to the conversations. I wanted us to get through this before we take any other.
So looking at e-banking, I looked at results generally and I saw that e-banking revenues jumped. Which bank had the best or the highest increase in e-banking revenue? And broadly as an industry, do you think that is this what's it called now? Is this a high base effect, or do you think it's something that is sustainable going forward?
Okay, so from the e-banking perspective, so let me just probably put a background to that. So if you look at the Nigerian interbank settlement data, that's the NIPS. If you look at the NIP volume as at August, on a year-on-year basis, the NIP volume in terms of volume and value trend was up 50%, over 50%, which sort of shows an attraction, which sort of shows like how attractive the payment sector is in Nigeria. And also given the fact that the Nigerian economy is typically cash-based. And we've also seen banks trying to invest in various technologies and also introducing various digital products and also growing their agency banking landscape. So the impact of those activities that the banks have been doing is what we see in terms of the feed through of their results. And also, like I mentioned earlier, there was a revision in fee. So they were coming from a low base before they were able to like grow that particular angle this year. So if you look at it on year-on-year basis, they've been like quite improvement, and the improvement was coming from the ability of the banks to be able to grow their volumes, and which is why you see them doing all sort of launching different virtual products for them to be able to create convenience banking for the customers and also accelerate financial inclusion. So just speaking in terms of the overall sector average, on e-banking revenue was around 40% up year on year. However, if you look at per individual bank, like Zenith achieved the highest growth in terms of e-banking revenue, followed by UBA and then GTB.
So do you think it's something that is sustainable? Because I'm asking because it's obvious that, okay, there was a cut in fees and the banks have been able to grow e-banking volume. So that tells me that maybe to counter the cut in fees, they've probably expanded volume of transactions or volume of customers that they've had doing transactions. So do you think it's something that is sustainable going forward, or is it a one-time bump that we're seeing?
Yeah, it's sustainable going forward, because if you remember during the pandemic as well, like there's been a shift in the consumer trend. So people typically favor the online channels as against going to the banks to perform in-bank transactions. So from that perspective as well, if you look at the banks, they've also been recording like a drop in e-banking in-branch transactions. And then if you look at the feed-through effect of that in terms of the volume they are driving on their mobile apps, so like they've been more of consumers using more of the digital channels. So over time, as banks also try to accelerate the financial inclusion using the agency banking landscape, you expect that trend to particularly continue for the banks. And given the significant growth that we've seen in terms of the payment system in Nigeria, we feel that there's an opportunity in that particular space.
All right. Thank you
Over
so
to
very
you,
much.
Ayo. I see we have about a minute left, or we're out of time. We need to campaign and get this show back to 30 minutes.
It was never 30 minutes on Onome. Please don't take on this campaign that hasn't worked for how many years. But yes, thank you so very much. A big thanks to our analyst. Is this report available, may I ask, Babatunde? For those who'd like to go because we didn't quite cover it, 17 pages. How is this? Is it available?
Available for our clients, basically.
All right.
So they would have to, get in touch.
So for Stanbic IBTC clients, they can get in touch.
Yeah, so
All
they
right,
have
fantastic.
to
Excellent. Thank you very much indeed. We have been reviewing the Nigerian banking sector here on Business Express 981. Good conversation thus far. And Onome has been moderating with Babatunde Ogunleye, Equity Research Analyst, West Africa region of Stanbic IBTC. A big thanks to all our listeners. If you want a copy of that report, like Babatunde mentioned, you can contact your customer service concierge at Stanbic IBTC. Thank you for listening. At 7:30, we bring you today's edition of Freshly Pressed 981. Before then, enjoy some smooth music here on Smooth 98.1.
Business trends beyond the headlines.
All right, thank you very much.
Thank you.
Thank
Have
you.
a great day.
Have a great day. We are back again for Stanbic IBTC.